Thank you for joining me for a look at our chart of the day. I'm going to look into this Ichimoku buy signal that is visible here on the chart of the S&P 500. As you can see on the right of the chart, the recent sell-off pushed the index below the cloud structure. And this was the first time since November 2016 that we've seen this signal. In 2016, we also saw a rapid reversal of the signal and a race up in the bull market that has been a record in the sense that it was more than 400 days without a 5% pullback. So the signals are rare, and that makes them generally more powerful. Now, let's look at what an Ichimoku chart is. And it's a series of lines, basically. And on this chart, as you see, we have the prices, which are shown as candlesticks. And Ichimokus are widely used on Bloomberg terminals. Anything that's on a Bloomberg terminal that's among the most popular indicators is of interest to me. And I've studied this and found that those are the indicators professionals are using to manage trillions of dollars. It's obviously important what they're looking at. And it's important just from the sense that we want to be doing what the large funds are doing whenever possible. So here's the cloud, and let me walk through each of these in a little bit more detail. So the cloud spans are the dominant feature on the chart. Those are moving averages set forward in time. And the red and the blue lines are simple moving averages of various price levels, and I go into detail on that in the next chart. Those from my testing, I've learned those don't have much value. The interplay between the clouds and what's called the lagging line, which is price set back in time, that's where the information on the chart comes from. So here's the different components, and I pulled this out of the book on cloud charts that's kind of becoming the standard reference for the field. And as you can see, the turning line and the standard line are rather simple moving averages of the last 9 and 26 sessions. The cloud spans are examples of how these lines are moved forward in time. And then the lagging line is we're taking price and shifting it backward. The basic interpretation is when price is above the cloud, it's bullish. When price is below, it's bearish. A trend change comes when the lagging line moves above or below the cloud. Now, testing doesn't show any benefit to including the standard line or turning line, but testing does show market-beating returns if we simply get out of the way when the cloud interpretation is bearish. That's why it's bullish interpretation. We tend to beat the market over the different time frames by 2 or 3 times a buy and hold return if we avoid the bear markets that the Ichimoku cloud signify. The recent cloud buy signal is another reason to be looking for a resumption of the bull market. This is yet another technical indicator. Many of the more traditional ones are also bullish. And we also have strong economics, strong fundamentals. These are all bullish factors, and they all point towards the potential of a higher stock market 6 months from now. Thanks for joining me for this look at our latest chart of the day.